A new COVID-19 variant was detected in South Africa.
A third case of the Omicron variant of coronavirus is identified in the UK. The new Omicron variant of COVID-19 has arrived in Australia.
Until the last few days, investors were feeling optimistic that the worst of COVID was behind them. But a new variant, Omicron, has spread from South Africa to several countries across Europe, Asia, and now Australia.
The Australian government will suspend all flights from the 9 Southern African countries.
That led to tens of billions of dollars being wiped off Australian shares, with travel and energy stocks dumped over fears of worldwide border closures. Oil prices plunged by 13% initially, while US and European markets suffered their worst trading days of 2021.
Well, it was certainly a Black Friday for markets. I think short term the market has overreacted. We should see that normalise over the next few days, as long as we don't hear bad news.
The Omicron strain couldn't have come at a worse time. Many countries are struggling with higher inflation, and central banks are under pressure to lift interest rates.
Because higher interest rates will come even faster, we're going to be asked to stand on our own 2 feet post the COVID world. We don't know about possible variants, as you highlighted, and does 2022 throw up another curveball with another Delta like what we're possibly seeing out of Africa at the moment? All of those are unknown questions.
But what the past couple of years has shown us is that investors get over the bad news very quickly, thanks to all that stimulus and low interest rates, which has pushed markets to record highs. But it has fallen a bit since then.
You'll probably hear the word stagflation quite a lot, stubbornly high inflation together with low growth, which isn't a great scenario.
One investor looking through the short-term pain is Kenan Herculoglu. Like many young Australians, he's been priced out of buying his own home, so he's growing his wealth in the stock market instead.
I can't buy a property with my own money. You know, not everybody gets that leg up in life, but I think one just needs to exercise patience and not compromise their principles on that point.
Former stockbroker Danielle Ecuyer says investors are also being forced to take on greater risk because of record low interest rates.
You're trying to save and you put your money in the bank, you're not getting any returns. So people are looking for alternatives, and that alternative is the share market, because the market has been performing so strongly.
Despite concerns about new COVID variants and higher inflation, some market analysts are optimistic about future trends, which they see as buying opportunities.
Digitisation is clearly one of them. So the rise of online buying, tech stocks, tech spaces, all of those kind of things are going to be a future. And you've seen that going forward.
Anything in cloud computing space, data analytics. In Australia, we've got some great technology companies that you can look at. Healthcare is an excellent one.
In the meantime, investors like Kenan are following these trends and trying to keep calm.
You need to exercise patience and not panic, I guess.
Hoping the fruits of his labour will pay off.